Hi guys, welcome back to another video. Today we're going to be doing an analysis of Nvidia. From what I've seen so far, they've been doing really good recently as they're up about 13% over the last week alone. So I want to start off by looking at their PE ratio. So as of right now, it's at a 106.21. So this shows it is very overvalued at the moment. What this means essentially is that the price of the stock cannot be justified by its reported earnings. When I look at the PE ratio, I want to ideally invest into a company that has about a 20 or less. Anything over a 20, I would consider overvalued. Next thing I want to look at is their dividends. So they're currently offering a yield of 0.05%, which equates to about 4 cents per share you own, it's kind of weak, honestly, if I'm not going to lie. Obviously, a lot of companies don't even offer dividends, so it is nice to see that they're willing to give back at least a little bit. All right, so getting into the income statement now, I want to begin with the revenue. So they're currently generating about 16.68 billion in 2021, which is up from the 6.91 billion in 2017. So right away, it is nice to see that this company is growing. Every year they have been increasing except a little dip in 2020, which is no problem. Just ignore it. I think it's fine. Let's move into their net income now. So it looks really good as it also has been consistently increasing basically every year. For all of you unfamiliar, the net income is important because it basically tells you how much they are profiting. All right, so the last thing I wanted to look at on the income statement is the shares outstanding. So as you can see, it has been slightly increasing every single year. So when looking to invest into a company, you want to see this be decreasing. So the more the shares outstanding goes up, the less of the company individual investors' share in the company is actually worth. Let's get into their balance sheet now. I want to take a look at their current assets. So they're currently at 16.06 billion as a result of their growth year after year. I would like to point out that they have managed to double their current assets over the past 5 years. So the last thing I want to look at on the balance sheet is the current liabilities. So it does look pretty solid. The most notable jump is in 2021, but before that they didn't really go up too much. So overall, they do have a lot more current assets than current liabilities, so this is what you want to see. The last thing I want to look at on their financial statements, which is arguably the most important part, is their free cash flow. So you want to invest into companies that are increasing their free cash flow because it shows how well the company generates cash to pay its debts and its ability to fund its operating expenses. As you can see with Nvidia, it looks great. They've been increasing this every year and they've more than doubled since 2017. In conclusion, Nvidia has some really solid financial statements. The only red flag I've really noticed is that their P ratio is so high. This leads me to think that it's not worth buying at the price it's currently trading at. I would definitely wait for a dip. It might be worth a buy if it dips back down to the $200 range, but as of right now, it's definitely overvalued at the current price. I would like to point out that a lot of the time, if a stock spikes up so rapidly, it falls just as fast at some point. So be careful trading it right now. Anyways, I hope you guys enjoyed the video. I want to point out that I'm not a financial advisor, so I recommend doing more research before coming to the conclusion of buying or selling the video. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.